Why include gold in your retirement plan? The rationale for gold ownership within a retirement plan is the same as it is outside the plan. This quote from a recent Vanity Fair article by Matthew Hart sums up why gold should be a part of every retirement portfolio. An ounce of gold cost $271 in 2001. 10 years later it reached $1,896, an increase of almost 700%. On the way, it passed through some of the stormiest periods of recent history, when banks collapsed and currencies shivered. The gold price fed on these calamities. In a way, it came to stand for them. It was the rediscovered idol at a time when other gods were falling in a heap of subprime mortgages and credit default swaps and derivative products too complicated to even understand. Against these, gold shone with the placid certainty of received tradition. Honored through the ages, the standard of wealth, the original money, the safe haven. The value of gold was axiomatic. This view depends on a concept of gold as unchanging and unchanged, nature's hard asset. Put simply, gold is money, money that cannot be printed or debased. What better way to save for retirement than with the ultimate savings vehicle, physical gold? For an in-depth look at gold's role in preserving assets under adverse economic circumstances, we recommend the study, Black Swans, Yellow Gold, How Gold Performs in Periods of Deflation, Chronic Disinflation, Runaway Stagflation and Hyperinflation. The study draws from the historical record to show why many view gold the investment for all seasons. Can I buy physical gold for my individual retirement account (IRA) or 401k? You can buy gold coins and bullion, and other precious metals in a self-directed IRA or 401k established with a trust company. People with retirement plans typically have a conventional IRA or 401k with a bank or brokerage firm that specializes in bank deposits, stocks, mutual funds, annuities and other assets. In many cases, these investors have little or no say in the investments being made. A self-directed plan empowers the individual to make his or her own investment decisions and adds to the available investment options. The precious metals are among those options. Can I do a rollover from my current IRA or 401k? Yes. As a matter of fact, most precious metals retirement plans begin with a rollover. The current law allows for both transfers from IRAs as well as rollovers from qualified retirement plans, such as 401k, 401(a), 403(b), 457, Thrift Savings Plan (TSP), and annuities. We have a great deal of experience with this process and can help you navigate it with a minimum of brain damage. Because of the annual fees for storage, insurance and management, approximately $225 per year, precious metals IRAs are most economical when their value is higher, and that is where a rollover makes a great deal of sense. Someone just starting an IRA, even with maximum yearly contributions, would need a few years to accumulate a large enough account to make it cost-effective. Please see our IRA rollover Q&A for detailed guidelines. What is the difference between my current plan and a self-directed IRA or 401k? All the rules, particularly pertaining to tax treatment, that apply to conventional retirement plans also apply to self-directed plans. Generally, conventional plans do not allow for diversifications into physical gold because of the special circumstances that accompany precious metal ownership, storage, insurance and custodial responsibilities. Typically, the client planning for retirement who wishes to purchase precious metals in physical form, i.e., coins and bullion, must establish a new account with a trustee that allows self-directed retirement plans. The client then transfers funds from his or her current trustee to a new trustee that allows these special transactions. What is the role of the trustee in my retirement plan? A. Self-directed trustees do not render investment advice. They simply provide the administrative and reporting services, and work with various vendors that offer specific, permitted precious metals investments listed here under the Internal Revenue Code. Of course, the trustees charge fees for their services and those charges are generally listed on their websites. As a result, the client planning for retirement can get a sense of what the costs will be before making a commitment. Why is it important to choose the right vendor for your gold rollover? Choosing the right gold firm can mean the difference between success and failure as a gold owner. Choose the right firm and it will help you stay the course on protecting your assets from economic uncertainties. Choose the wrong firm and your funds can be diverted to an assortment of bullion-related investments and/or derivative investments that are not truly asset preservation vehicles. Gold stocks, for example, are an investment in stocks first and gold bullion second. Mint state and proof coins graded by independent services usually sell for high markups over their gold value that immediately put the buyer at a disadvantage. Precious metals exchange-traded funds and certificates introduce counterparty and systemic risk to the investment equation. These are just 3 examples of the kinds of investments that can lead the investor away from the stability of conventional coin and bullion investments, and generally should be avoided by investors whose goals include building a hedge against economic certainties or a long-term store of value. How can the average person planning for retirement distinguish between the good vendors and the bad? First, and most important, check the Better Business Bureau's profile on a company before you do business with it. Check not only its rating but the number of complaints, the type of complaint and how those complaints were handled. A consistent record of complaints can be a warning sign even if the company has managed to keep an A+ rating. This is a simple and straightforward step every first-time investor should take, but it is amazing how many ignore it. Second, choose a gold firm that has a solid track record. 10 years in business is good, 15 years or more is even better. Third, choose a firm with a commitment to keeping you informed, i.e., one that is interested in answering your questions now and keeping you informed in the future. If a salesperson gives you short shrift or hits you with a heavy sales pitch, take it as a warning. What are the mechanics of a gold rollover? It is quite simple and straightforward. After an initial telephone consultation, we send an email that contains links to trust companies we use to administer the program. The client chooses which trust company he or she wants and then submits the completed paperwork by email, fax, overnight courier, or standard U.S. mail. The process of opening and funding the account is handled by the trustees involved in the rollover. Usually, in the course of about 2 weeks, sometimes less, the funds are rolled over from the current trustee to the new trustee. What happens once my IRA has been funded? After your account has been funded, you are ready to make precious metals purchases within your IRA. Here, you can put our years of gold market experience to work for you. One of our IRA consultants can help you choose the best product mix to fit your individual investment goals. Once you have selected the coin or the bullion product you wish to include, we will fix the price verbally with you by telephone. Next, you instruct the trust company to transfer funds to us for your purchase. Upon our receipt of payment, we deposit the metals directly into your account at the depository. You can rest easy knowing your precious metals are stored in a secure depository in a fully insured allocated account. We will work closely with the custodian through each stage of the process to ensure your transaction goes smoothly. Is now a good time to do a rollover into gold? Gold, first and foremost, is wealth insurance. You cannot approach it the way you approach stock or real estate investments. Timing is not the real issue. The first question you need to ask yourself is whether or not you believe you need to own gold. If you answer that question in the affirmative, there is no point in delaying your actual purchase, or waiting for a more favorable price that may or may not appear. Cost averaging can be a good strategy. The real goal is to diversify so that your overall wealth is not compromised by economic dangers and uncertainties like the kind generated by the 2008 financial crisis or the ongoing sovereign debt crisis in Europe. Is a checkbook gold and silver IRA a viable strategy? The checkbook IRA is a risky, problematic approach to precious metals retirement planning and a bad choice for our clientele. The traditional self-directed IRA account placed with a solid trust company is still the safest avenue for the retirement investor and the one most likely to deliver the intended results. Here we provide a full analysis of this approach to using precious metals for your retirement plan. We strongly suggest reading it before committing your hard-earned retirement funds to this questionable strategy. Setting up a precious metals IRA need not be difficult, expensive or time-consuming. We are happy to assist you in filling out your account setup forms. This can be done online over the phone quickly and easily. Your call is welcome. We invite you to put our 40+ years experience in the gold business to work for you.